For more than a decade, if you thought about triple-digit silver, you probably thought about one person, Keith Neumeyer, the CEO of First Majestic Silver. He has been, without a doubt, the heavyweight champion of silver bulls. But now that silver has actually made its historic run, a really fascinating puzzle has emerged. So let's dive in and really unpack the story behind this stock. Okay, so here's the core conflict laid right out for you. On one side, you've got the promise. Keith Neumeyer, consistently, passionately telling everyone that silver would break $100. And you know what? In 2026, he was proven right. He nailed it. But then there's the paradox. For the investors who believed in that vision way back in 2011, the reward just hasn't shown up in the stock price. It's still kind of stuck at similar levels.
So that brings us to the million-dollar question for this entire analysis. If the metal did exactly what the CEO said it would, why didn't the company's stock rocket to the moon right along with it? Why didn't it create those massive returns for its early believers? What is going on under the hood here?
To figure that out, we really have to peel back the layers. We need to look at two competing forces at play inside this company. The incredibly powerful story it tells, and, well, the hard financial data that story's built on. First up, let's talk about the narrative. And believe me, it is a powerful one. For years, through every single market cycle, Keith Neumeyer has been the face of triple-digit silver. When silver was down at $18, he said 100. When it was at 25, he said 100. That consistency built him a massive and incredibly loyal following. And look, this wasn't just talk. It was a masterclass in branding. The company leaned hard into that whole physical versus paper silver debate, positioning itself as being on the side of the little guy. They even started their own mint to sell silver bullion directly to their followers. The message was simple, it was powerful: squeeze the banks. But, and this is a big but, this is where the narrative and the numbers really start to pull apart. The story was all about squeezing the big banks, but the financial reality for a lot of investors felt more like a squeeze on their own portfolios, thanks to something called shareholder dilution. So what is shareholder dilution exactly? Well, to put it simply, it's when a company issues new shares of stock. It increases the total number of shares out there, which means each share that already existed now represents a smaller piece of the company pie. Your slice just got smaller.
And this dilution is the real key to the paradox. The data shows that since 2021, First Majestic share count has gone up a lot. As the price of silver climbed, the company kept issuing more and more stock. Now sure, that raised money for them, but it meant that every single share held by an early investor was worth a smaller and smaller piece of the whole company.
But that's not the whole story, because it gets even more complex when we look at the company's recent operational track record. And that has been a real roller coaster, a tale of a huge failure and then a very, very costly attempt at redemption. Okay, so check this out. In 2021, the company makes this huge bet, buying the Jerritt Canyon mine, calling it a transformational acquisition. Big move. Fast forward just 2 years, and that same cornerstone asset gets shut down after burning through millions of dollars, an absolute operational disaster. But then in 2025, facing a serious production crisis, they make another massive play, buying a majority stake in Gatos Silver.
And this chart really shows you just how critical that move was. By the end of 2025, that brand new Gatos silver asset was already responsible for about 35% of First Majestic's entire quarterly silver output. Without that deal, their production numbers would have looked pretty grim.
So, the key takeaway, according to this analysis, is that the Gatos acquisition was basically a save-your-skin move. It wasn't just about buying silver in the ground. It was about buying a brand new growth narrative to distract everybody from the very expensive failure over at Jerritt Canyon.
All right, that brings us to the next really critical piece of the puzzle, the actual cost of getting that silver out of the ground. Because in the mining world, it's not just about how much you produce, it's about how much it costs you to produce it. This slide is incredibly revealing. It compares First Majestic's projected all-in sustaining costs, that's AISC for short, for 2026 against some of its competitors. Look at this. First Majestic is projecting costs of $26 to $28 an ounce, while competitors like Pan American and Silvercorp are running way more efficiently, down around $18 and even $13 respectively.
Now why does this matter so much? Well, because when silver is trading at $80 an ounce, pretty much every producer looks like a genius. But that high-cost structure creates a huge vulnerability.
If the price of silver were to pull back to, say, $50, First Majestic's profit margins would get absolutely crushed, while their more efficient peers would still be making really good money.
And what's wild is that this risk doesn't seem to be reflected in the valuation at all. In fact, it's the opposite. Right now, investors are paying a forward price-to-earnings ratio of around 62 for First Majestic. The industry average for other silver miners, it's closer to 20. That is a massive, massive premium.
What you're doing, in effect, is paying a 200% Neumeyer premium. The argument from the source material is that you're not just investing in a silver mining company based on its numbers. You're buying the story, you're buying the charisma. Heck, you're buying Keith's Twitter feed.
So let's put all the pieces together. What does this all mean? What's the final verdict for an investor trying to figure out this disconnect between the story and the stock chart?
Probably the best analogy here is that First Majestic has become the Tesla of the silver mining world. It's got the incredibly charismatic and visible leader, an army of fiercely loyal fans, and, as a result, the highest valuation in its sector by a country mile.
And that leads us to the core takeaway from this entire audit. You know, when a story is this compelling, it is so easy to get swept up in the excitement. But the ultimate message here is to always ground your decisions in the financial data. At the end of the day, you have to trust the math, not the myth. Which, of course, leaves us with one final provocative question. If First Majestic is the popular, high-premium story stock, does that mean the real opportunity is hiding somewhere else? Which smaller, more efficient junior miner might be the actual value play in this silver market? Well, that's a question for another time.